Good day, everyone. Actually, I I have been on my chart for going through some of the stuffs I marked out, and then I don't really trade all these pair. There is no way I can trade all the pair, and based on the way I see the chart, I prefer to have a certain pair I trade and patiently wait for price to present itself before taking trade instead of jumping from one pair to another and all of that. I prefer to have certain pair. It could be two, it could be three. All I just have to do is patiently wait. Even though I understand the price action on other pairs, even though I can comfortably, as you guys can see, even those on my Telegram channel, I trade just 4 pair, but I have trade other pairs to even both BTC, and you can see that when it comes to understanding the chart, you can trade any pair out there. But when it comes to trading itself, this is not about understanding charts. When it comes to trading itself, you have to tell yourself the truth that you cannot catch every move, you cannot catch every highs and lows, every buys and sell. It's better you just focus on something that works, focus on certain pair that you are used to, that you have backtested, that you have studied over a period of time, and then make money from it. It will not make sense when you make money from a pair and lose it to another pair. It doesn't make sense at all. So now this is these 2 pair, Euro card and GPP card. They are both XSS card. And when they mean XSS card, these are the pair that tend to move in the same direction, right? Now, it is not really about using correlation blindly. Even though you are going to use correlation, you still have to use your technical analysis to analyze. And if Euro card is telling you buy, GPP card is telling you sell, if your technical analysis is correct, then I'll keep saying this, that I will take what price is telling me. I will take what price is showing me. It is not what I think. This is not matter of you thinking. This is what you see. So now this pair, I have them marked out, I think some few weeks ago. But I want you guys to look at this. I opened 2 tabs because there's something I want to show. This is GPP card. Now, my other tab, this is Euro card. Now, if you check it very well, I think about, I'm going to cut the price action. So I think about when I came back in August, right? Was it August? Yeah, beginning of this month, August. I had this low, but I have been waiting for price to take out this low. In fact, I wasn't expecting price to buy. My expectation was for price to continue the sell and take out this low. This low is what is a sell side liquidity. Now, the major reason why I was expecting price to take out that low is very simple. From the higher time frame, we say price move from buy side to sell side. Price move from liquidity to liquidity. So from the higher time frame here, a buy side has been taken. A liquidity has been taken. So even though liquidity has been taken here, we cannot just continue buying blindly. We have to take another set of liquidity to move to another set of liquidity. It is just like saying price move from internal to external. So price move from sell side to buy side, right? Now, this is the same thing that happened here. Immediately we took out this high, my expectation was that, okay, price has to take out this low. This is the sell side here. This is the sell side liquidity. Price has to take out this low. Then we now come, and aside from that, below the sell side, you can see fair value gaps. And I've said it that fair value gaps are example of internal liquidity. So that was my expectation when I was looking at this pair around August, right? So now, we have taken out the buy side, and the expectation is for price to take out the sell side, right? So that is it. This was my expectation. I was expecting price to come and take this out. Now, since that did not happen, right? My expectation was, it's not everything you expect that will happen. Definitely, this is just you following price and try to take advantage of whatever price is printing. So now, instead of that to happen, we didn't come and take it out. Instead of that, we started buying. Ha. Okay, the problem is not us buying now. Okay, since we started buying, you might think, oh, we are coming for this high. Because now that we started buying, we have broken internal structure to the upside. So we have a range, right? I want you guys to understand that we have a range from this low to this high. So we came inside of the discounts and we bought. So there's definitely going to be a chance that we could sell from the premium back to the discount. Now we are inside of the premium. I will keep saying this, that absolutely, you necessarily don't have to come here and, do something like this, because why will you be selling from here in the first place? You trying to sell from here doesn't make sense, because this leg did not break structure. We didn't take out the low. So this leg here, this still shows that we are bullish, because now this was the last break of structure that happened. This was the last sweep, and this was the last break. So our expectation is that price was supposed to take out this low, but that did not happen. So this low is the internal range liquidity. So you cannot start taking a sell from there, right? You cannot start taking a sell because that leg did not break structure. Now, since the leg did not break structure, definitely you want to continue seeing what price will do. Now, we get into that zone. We started giving some sort of reaction, right? Or you just, like I told you now, we are going to be trading from premium to discount. That is why we have a range. So you want to take your box, your rectangle, and you want to look for a point of interest from the discount, right? And then using the same range, we are going to have, definitely we now have a range from this low to this high. Because if I'm going to go down to lower time frame, that is a different price action on its own. If I'm to zoom out here, you might be kind of confused, but you don't have to get confused looking at the chart this way. We have a sweep, we have a break. We printed a low. Same thing for this high here. We had a sweep from this leg, but the most important thing is that we now have a break of structure to the downside. So we have all of this as the internal liquidity, and internal liquidity. So we want price to now trade inside of the discount of the structural range and the recent range. Right, let me draw. Yeah, this is it. So the discount is the purple side. We want price to come inside of the discount of this range and this range. This make it high probability. So it is not about you choosing supply and demand from a random place. You have to consider your structure, your liquidity, and your range. Your structure here states that price is still very much bullish because this leg hasn't broken any external structure to the downside. So you don't want to trade against the trend. Your liquidity is that this are internal range liquidity, which price has come to clear. So you now have a range from here to here, and this range too as well. Now you can see that currently now price is inside of the discount of this range and this range. So that is where you want to take your entry, right? That's where you want to take your entry. You cannot just start selling. All right, you cannot just start selling and start trading against the trend. So now you can see our price bought from there, right? The most important thing is that we are buying from the discount, right? If I'm to go to other time frame to check wherever price is reacting from, the price is actually reacting from here, right? We are reacting from here, but we have taken out the internal range which we expected, and we are trading inside of the discount of this range and this range. So we started buying. So from internal to here, external, this become an external structure because we have taken out the internal and the internal. So this is, because you cannot just like packing out a supply here and start selling from there. So now price took it out, right? We expect price to take it out. Just as expected, we took it out. Now, I will keep saying that this is technical, and there's a reason why it is called technical analysis. It's something that you have to calm down and look at it and try to, not just about marking out points. At the same time, you still have to study and understand what is happening. So now that we have taken out an external high, we are currently back to the premium of this range, right? There is a high probability for price to still come directly here and take out this high. Definitely, every highs and lows and liquidity. So now, we kept on buying, and I want you to observe what price is doing, right? Because now, a lot of people will now come here and still mark this, right? Want to buy. Now, the thing there is this low, definitely, okay, it didn't even sweep liquidity, but that low, if you check it, we had some kind of mitigation. So it broke structure, it has an inducement, right? And you want to take your buy from there. But at the same time, I want you to observe that price is now currently printing a trend line liquidity, which you have to be very careful, right? It is not, but it is absolutely not by force that you have to take every trade, right? If you are not, if you are not comfortable, if it doesn't make sense to you, let me put it that way, if it doesn't make sense to you, you don't have to take it. But this is it. Definitely there's going to be a reaction from here. But I've told you guys that based on the way I trade, I personally, I will not take this, right? The reason is that I've said it that number one, I don't like trading where trend line is. Instead of that, I trade and target the trend line, right? And the second thing is, if it is too obvious, it becomes something that everybody wants to take. Now, I want you to observe what actually happened here. What actually happened is that this external high was taken just like I explained, and this external high too was taken just like I explained. Just before I clear my chart, before then, I had my alert, right? I had an alert at this high, which I was expecting price to come and take out the high and sell to the downside. Now, the reason why is not, but I remember telling you guys that this is a sell side, right? Buy side has been taken, which is this line I drew out here. So sell side, we are the sell side, we are the premium. Now, the second reason is now that me trying to take a sell from here, trend line has been printed. Now, if I'm to like, I'm sorry, trend line has been printed. Now, we had a breakout of that trend line. Definitely there's going to be a break and retest. The people trying to buy from here, what do you think is going to happen to them, right? Because this place is too obvious for you to start buying. It doesn't, instead of me, I will prefer to engage a buy from here, which I'm sure that I will have missed out this buy because I'll be looking at a point of interest below, right? But you can see where price reacted from. But now, me buying from here now, we are now currently at the premium of this. You can see what I'm trying to say now. This is it. This buy from here, it is now currently we at the premium of this range, right? It is currently at the premium. It is not a good place for you to buy, right? So instead of that, you want to sell from the premium. Now, it is not just about selling. The second thing I want you to observe is that now we have a clear intent in price. This is it. If price is trying to sell, let me clear my chart here. Let me clear all of this. So let's assume that you have marked this as your last low. This is the last valid low because that was the last low that swept liquidity, and that's currently bought from the discount. So we have this as our last low. Now we now have this as our last high. Why? Because this high swept liquidity and take out internal range liquidity. If you guys have watched my video on range, so that is a range. A range, sweep liquidity, break structure, sweep liquidity, break structure, give you a range. So that is just it. You don't have this and this. That is just all you want to see. So that was what happened here. So we have a low and we have a high from here now. Now, definitely where you are trying to, where this place is, definitely is inside of the discount, right, of this range. But it is not inside of the premium of this, right? That is why, another reason why you shouldn't be buying from them. And then instead of that, you want to take a sell from the premium of this and the premium of this, right? So all you just have to do is mark out your liquidity, right? And then the place I was actually targeting was this sell side liquidity and the trend line liquidity. I was expecting price to go clear out the trend line liquidity totally, entirely. No, that was not the trend line. This is it. This was actually the trend line. I was expecting price to go clear out the trend line liquidity like totally and entirely. So definitely you want to like, and then yeah, we had a sweep here. This is the first sweep, and this is the second sweep here. We had a sweep of liquidity. We started having intent in price. You can see price printed the first high, the second high, we printed another high. So out of those three high, one has to be taken. Just you need one to be taken. If price come and take this and sell, good and fine. If price come and take this and sell, good and fine. Anyone, you just need one to be taken. So where you now want to choose your point of interest from, where to sell from, let me cut this out. So let's go down to 4-hour time frame. Like, you know, I like taking my candlestick from the higher time frame, then I cannot go down to lower time frame to refine it. I don't go to lower time frame first. I go to higher time frame, choose a candlestick, and then go to lower time frame to refine it. So this is a high which I was initially expecting price to take out, which I was now looking to take a sell above that high. Yeah, like this. That was my initial expectation. But as you can see that instead of that to happen, that did not happen. Instead of that, we came inside of this other block I talked about, right? I said I still claim. We came inside of it, and then we now printed another block from here. You can see that this is a very clean other block. That was the last buy candlestick before the downward move that broke structure. So that is another block from there. And then that's candlestick, that means that this candlestick has been mitigated. You know, one thing is that we are focusing on the body of the candlestick, not the wick. So looking at it, this particular candlestick here has actually it has tapped into this one already. So you can see that the reaction, that was where price reacted from before selling. So the price, we expected price to come there, and then we continue selling to the downside. Then we had a break of structure again to the downside. So now, you know, you want to, now another thing is you keep following price. Since the intent is already showing that we want to sell, you don't want to buy from here again, because this leg here did not, you know, break above this high anymore. So instead of that, price is going to, this is going to be the week low, right? This is going to be the week low. So let's see if a range will be given from there. We are going to have a pullback or a range. I'm not sure that actually happened, because okay, price sold directly to the downside and we continue selling. But overall, I personally, because if it is like a pair I follow, probably, I don't know if I will have missed it, but I missed it because my entry was actually, I was expecting price to take out this high. Like I said, this particular line here, that was where my alert was and my stop loss was here, right? So I was expecting price to take it out. You can see the our price gave us intent that we want to sell. We had the first high taken, we had a sweep of liquidity. Price gave us something like an inducement, something that's going to deceive people to buy. Instead of that, that printed an inducement. This reaction printed an inducement. If you check it, price sweep this high, you can go to your Euro card and check it out before we continue selling to the downside. But overall, we came and targeted the sell side liquidity. Now, if you check the higher time frame, this is what I'm trying to say. So this is the buy side that was taking this high. So this is the sell side that was targeted. And you can see that we have, you know, trend line liquidity there before that actually happened. We have trend line liquidity. This is it. We have trend line liquidity before price reverse back to come and clear everything, and this will become the targeted low. Now that is for Euro card. Euro card, you can see our price moved from external to internal, from the buy side to the sell side. Now for the GPP card, this is what I want you guys to now observe. You can see that on GPP card, price took out this high. Price took out this high. I went back to watch a video. I went back to watch a session I had with my mentorship student, and I remember I remember talking about GPP card from this supply here. Oh, no, it wasn't that supply. Sorry, it was a supply from here. I'm coming. I think it was a supply from here also. But this is what I want to explain now. The difference between what happened on GPP, this is why you need to understand structure. You can see that GPP card actually took out internal range liquidity. Then we go for the external range liquidity. But Euro card did not do that. Euro card first took out the external. Then we now come for the internal. That is just like vice versa of what happened. But GPP card first took out the internal before we now go for the external. So even though this pair has this kind of positive correlation in the sense that they tend to move in the same direction, you still have to understand that you should not neglect your structure. You should not neglect what the chart is showing you. Everything is on the chart. Now, Euro card and GPP card took out internal before we now go for the external. So the next place we are coming from now, this is where and I want to like talk. This is what I want to like talk about. So when I was having the session, I think I was talking about a supply from here, right? Because we had a sweep from here and we had a change of character. This is where the change of character happened, like, right? Change of character. Why? Because this was the last low. Sorry, because this was the last low that broke structure to the upside. So we had a break of structure to the upside, and then this price couldn't protect this low anymore. So we took it at giving us change of character, like temporary change in trend. That does not mean that the overall has changed bearish. It's just like temporary, which is indicating that we want to reverse, is indicating that we want to sell. So, a very good way to take, we have an inducement here. So probably this was a very good place to actually take the sell before price start coming. But anything that is making price to come back, it become really it becomes low probability. So now I could remember marking this out like this. Now we started buying to the upside. We started buying to the upside. Now I want you to now watch out what happened. We had a reaction. We were breaking structure, right? We were coming from internal to external, internal to external, internal to external. So this is now external, right? This is now an external high. All right. So let's see. We expect price to take it out. So price took external high, right? Same thing, we now move from internal back to external. Now, the thing there is that this could have been an inducement, which I'll be looking to take a buy from here and continue. But I won't there to continue to the upside. But this kind of thing, like I told you guys, that it's kind of a low probability solve, because if you look at it now, you have a range from here to here. So this is you trying to buy from the premium. So instead of that, you don't want to do that, right? Instead of that, you want to see price coming to take out internal out of this low as the internal, and then you want to choose a point of interest from the discounts, right? From the discounts. So, but obviously, that did not happen. Instead of that, we keep on breaking structure. So we broke above this high, we broke above this high, and finally, price took it out. Now, this is what I want to say, that now you will see a lot of people trying to take a sell from here. So what I'm trying to say is that you don't have to do this. Instead of that, see how Euro card actually show that intent that we want to sell. You can see how Euro card show that intent that we want to sell. There was a very clear intent in price. There was a switch in price, but here you can see that there was no single intent in price. Price was mitigating supply and demand. Price was mitigating demand, mitigating, and we kept on buying. And definitely, as price was doing that, we are printing the trend line, right? We keep on printing trend line, we keep on printing trend line, and eventually we took out the external high. And where is going to be the next target for price? It is going to be the internal range, right? The internal structure, which they are going to be, this is going to be my number one internal range. I said it that you should have just wait. Instead of me buying from here, I will have wait for price to come and I'll buy from the discount. That's what I said, right? So this is going to be my first internal range I'll be expecting price to take out, right? Now, you can see that after we took out this external high, we didn't close above it, which indicates a sweep of liquidity, not a break of structure. A sweep of liquidity, not a break of structure. So we now have a range from year to year, right? Same thing I said, a sweep, a break. This one, a sweep, a break. We have a range from there to there. So now that we have a range, we want to start selling from the premium, right? You can see that this range now, this range now is now out. Why? Because our range has been taken. So that range is out of the picture. We want to focus on the present range now. So this is a range, and then you mark out your inducement from there, and you want to take your sell, right? To come and take out, the first thing you want price to come and do is to take out the internal range. That's just the first thing you want price to come and do. So you go to your higher time frame as usual, go choose a place, a point of interest, and the first place where price could be we like to react from is the order block. That was the last buy candlestick before this downward move that broke structure. So, like as I was saying, the other block, that was the last upward move further downward that broke structure. So that is the other block. If I mark out the other block, it's quite it's aligned with this inducement, right? This IF, which is going to be the inducement. So you want to take a sell above the inducement, and then the first targeted place is going to be your range low, which is still an internal range liquidity, right? Which is still an internal range liquidity, and that is just it. So now you can see that the best thing when it comes to trading, yeah, the stop loss can actually be at the high here like this, right? Or the overall high, or this high here like this. Now, the best thing when it comes to this, when it comes to SMC is, it is not just jumping into a trade blindly. It is you studying the chart, and and understanding, like I said, that is going to be my first place, and you can see our price took it out. But I won't be trying, I won't be trying to buy again from there, even though it's from the discount. You need to understand that price is attracted to liquidity. So even though this demand is from the discount, I will not be buying from there, right? So your trade has to be logical. Your trade has to be logical. Anything that will make price to completely break this low, then we are now going to have a range from the last low to the last high. We are now going to have a range from the last low to the last high, right? That is if price completely break it, completely break it. But aside from that, since price has taken out the internal range liquidity, since price has taken out this internal range liquidity, if I see same thing, I need to see the intent in price, then I'll buy. Yeah, then I'll buy, because now we now have this high as what? Internal structure, internal liquidity, which is going to be target for price. So that is all for now, guys. See you later.